afternoon, everyone. Thank you for joining us at our Prestige PEO webinar series. My name is Carrie Kaiser. I'm the Marketing Operations Manager at Prestige PEO. Here to talk about MassMutual's whole life insurance benefit offered to you this open enrollment season is John Manning, Insurance and Financial Advisor at MassMutual. Our webinar audience members are muted by default. However, we encourage you to make use of the chat feature to pose any questions you may have. I'll be monitoring the chat and throughout the presentation, so feel free to participate. Additionally, the webinar will be recorded and will be made available on our open enrollment website at prestigepeo.com/open enrollment for your reference at any time. And now I'll turn the mic over to John. Welcome, John.
Thank you, Carrie. Thank you, everybody, for your attendance today. Hopefully we get some good information to you. I'm going to speak for a few minutes, and then I'm going to go through this presentation. So MassMutual and Prestige have teamed up now for a few years to offer all employees and employers a unique opportunity to enhance their personal protection and retirement plan. Okay, these life insurance policies through the program are offered via what they call guaranteed issue and simplified issue. They're individually owned whole life insurance policies that grow cash value and have guarantees. Let me start with the guaranteed issue. If this is your first enrollment coming up, you are guaranteed $100,000 worth of life insurance no matter what your current health situation is. It's guaranteed to you no matter what. The simplified issue part is an additional amount of insurance up to $250,000, which you simply have to answer a couple of questions for to get it. There's the guaranteed $100,000, and then the rest is simplified issue. There will never be any medical or financial underwriting at all. No tests, no medical exams, no checks for pre-existing conditions, etc. No doctor's records. Like I said, the first $100,000 is guaranteed issue at standard rates. And the additional coverage up to $250,000 just simply requires answering a few questions. And I'm going to go through those questions in a little bit. And the offer is repeated annually. So technically, every year on the policy anniversary enrollment, somebody can enroll for another $250,000 and then another $250,000 the year after that, ultimately end up with a maximum of $1 million of MassMutual whole life insurance. And whole life works like this. Let's say an individual was a 30-year-old, decided to buy a $100,000 policy, and the premium contribution was $25 a week. What would happen is on the first day, he would have a $100,000 policy, and in the cash value component of the life insurance policy, there would be no money. Cash value is like a savings account built into the policy. And then week after week, $25 would be deducted from his paycheck and put into his policy. So weeks and weeks go by, months and years, and now let's say this individual has now $5,000 or $10,000 saved in his cash value. That means now that death benefit on day one that had started at $100,000 would now have grown to $105,000 or $110,000. Meanwhile, that $25 premium contribution will always remain the same. And what is that cash value? It's the living benefit, okay? So if this individual had a sudden expense come to him, he had to do home repair that he didn't expect, or car repair he didn't expect, or he had some bills mounting up, or if he wanted to go on vacation, quite frankly, and he didn't want to touch any of his other marketable accounts. Perhaps he would have to sell some equity from a marketable account and, pay taxes on it, or if there's a penalty or something like that. Access of the cash value in your whole life insurance policy is always tax-free and penalty-free. So this individual needed $5,000 in a pinch. He could simply call me up or go online to his account, withdraw $5,000. That would be a tax-free, penalty-free exchange. The money would be sent to him in 24 to 48 hours. There's no 1099. It's not reported income. It's simply like going to the bank and withdrawing money. What would happen? The cash value that was at $10,000 would now go down by $5,000 to only $5,000, obviously. And the death benefit that had grown up to $110,000 would be reduced to $105,000, and then he can go spend that money however he needed. If he wanted to pay it back in the future, he could. He doesn't have to. Okay. And then the next week, the $25 contribution would come out of his paycheck, and it would go into the cash value, and things would continue to grow. All right, MassMutual. This is me. I'm John Manning. That is my direct office number. I would pick up that phone if you called me. That is my email. Okay. And this here is a calendar link to my schedule. So if anybody would prefer to have a little one-on-one question reviewing this presentation, or if you have questions that are personal about your application, you can either call me, email me, or use my calendar link to set up a one-on-one meeting for 15 minutes or so. Some facts about life insurance. As you would imagine, MassMutual studies this quite extensively. U.S. households, almost 50% have no life insurance at all, which is an alarming statistic to me. 34% only have group life insurance, is insurance that you get through your employer. But oftentimes, and they're all kind of different, but oftentimes those life insurance policies would go away if somebody left one job for another, or if they retired. And if they are portable, at times it can be an expensive conversion, meaning they can't do any underwriting, so they would charge you expensive rates, maybe a smoker rate, etc. So group insurance is good to have, but it's not always going to be around. Nearly 1 in 3 Americans say they need more insurance, but just haven't gotten to it. Maybe it's the medical exam, who knows? And 60% of employees prefer to buy insurance through work, why Prestige is such a great company, and really makes a lot of the benefit part of your life easy by payroll deduction. The MassMutual product has a couple of key features that I want to share with you. The first circle right here says guaranteed level premium. I mentioned it before, but guaranteed is a word that I just love saying. Guaranteed level premium, meaning for that example, if that was $25 a week when that individual started and he was 30 years old, when he's 40 or 50 or 60, it's still going to be $25 a week, and I can guarantee it. There's a guaranteed increase in cash value every year, which means if you've got 2,000 in there at the end of this year, at the end of the next year, it must be more by contract. And the cash value amount can never go down. It can never be affected by the economy. It must go up, and it can never go down. It's like money in the bank. The death benefit is guaranteed from the first day. Oftentimes with insurance policies, you have to own, if you get 100,000, you have to own it for 2 years before you accrue to that amount. Not here. The entire death benefit is guaranteed from day one. The application is simple. There's a URL on the platform that you click for MassMutual, and you self-register. You'd pick your own PIN number. Your username will always be your social security number. And you fill that out, and then you register into the system, and then you can enroll very, very simply. These policies are dividend eligible. Let me explain that. MassMutual is a mutual company, which means we are mutually owned by the policyholders. Other financial companies, good ones too, they have stocks listed on an exchange somewhere. So the job of the CEO of that company is to make that stock price go higher, right? Make the company more valuable. And then they pay dividends to those stockholders. But we're not listed anywhere. We're mutually owned by the policyholders. So being a policyholder is like owning a little piece of the company, having an ownership stake. So rather than pay dividends, because we don't have stockholders, we pay them to our policyholders. And in 2025, our dividend rate is 6.4%. In 2024, it was 6.1%, so it was up 30 basis points in the last year. And in 2023, it was at 6.0. So it's been increased 40 basis points in the last 2 years. And I'm really hoping that that trend continues in light of interest rate environment in our market economy. It helps some places and it hurts other places, but in this case, it helps the return on your cash value. There are 2 riders that are included in this benefit. First is a waiver of premium benefit. And the waiver of premium benefit just means that, God forbid, if any of my clients were to become sick or injured to the point where they're disabled and they can no longer work, well, then MassMutual will waive the premium and pay it for you. Mass doesn't want, an illness or disability of any kind, and that interruption in, your financial picture for their life insurance to become a financial burden. So we'll say, hey, listen, we got it from here. We'll pay your premiums for you. And the other one is that chronic care benefit. A chronic care benefit works similarly to a long-term care benefit. And a long-term care or this chronic care benefit means that if any of my clients have any cognitive disorder where they have trouble processing their information, like dementia or Alzheimer's disease, that would qualify as a chronic care event. Or if any of my clients have trouble performing 2 out of the 6 activities of daily living. Activities of daily living are like walking, feeding, dressing, grooming, toileting, bathing, transferring, stuff like that. I remember with my own grandmother, she needed help around the house with certain things. But if anyone has trouble performing 2 of those 6 activities of daily living or have cognitive disorder, they can access in one lump sum 50% of whatever the accrued death benefit is at that point. So going back to my very first example, that 30-year-old who was contributing $25 a week, when that person, let's say, gets to 94, hopefully never, but 94, and they have a chronic care event in their life and they need help, the death benefit value for that life insurance policy that started at 100,000 could very well be over 200 up to 250,000. Who knows where the dividend rate is going to be for the next 60 years. So with all the compounding over the years, if that was up to 250,000 of life insurance, he could get 150,000 to him in a lump sum and then decide how he's going to use it to help him survive his situation, whether it's hiring a nurse or building a ramp to get up the stairs or whatever it may be. And the last
John, I have a quick question that came in before you get to the next point.
okay, great,
how long
please.
does that premium waiver last due to illness?
So the waiver of premium would last forever as long as you were still disabled and unable to work. If something remarkable happened and they found a cure for whatever it was that was rendered you disabled and unable to work, and you suddenly could go back to work, well, then you would just start paying your original premium again, and you would not owe anything back. Okay?
Thank you.
And these policies are permanent and portable. Permanent meaning if you were so lucky to live to 105 and could afford it, this policy would still be with you. And it would be quite a lot more than you originally bought if you were still alive at 105. And it's portable for life, which means that if you do retire or if you do leave the company you're working for and are no longer getting benefits from Prestige, we very simply would switch it from a payroll deduction to an electronic funds transfer from your checking and savings account. There would never be any increase in costs because that premium is level. They would never decrease the death benefit. Actually, the opposite. The death benefit grows every year with the increase in cash value, and it would still be yours. So this is ownership. This policy is something that you own, and you get to take it with you. So employees must be between the age of 18 and 75 in order to qualify or to be eligible. And the smallest policy amount you can purchase is 10,000, all the way up to the max per year of 250,000, and it must be in a $5,000 increment. So 10,000, 15, 20, 25, etc. Also included is an opportunity to get coverage for a dependent. That would be a spouse, a child, or a grandchild. Some people kind of get squirrely when we talk about juvenile life insurance policies, but remember, this is a valuable asset. This is a savings plan and a way to lock in a, $2, $3, or $4 a week premium for someone, and then you would transfer it to them when they grew up to be adults, and they would have cash value growth, and everything would be the same. So I mentioned that the employees' ages must be between 18 and 75, but for spouses, it's 18 through age 60. Sorry about that. The spouses are ancillary, so the employees are the main focus. For children and grandchildren, they must be, a couple of weeks here to 26 or younger. It doesn't mean that these policies go away when a child turns 26, just means to be eligible to enroll initially, they must be 26 or younger. And the last part here is that the only face amount is 25,000, not greater or smaller. It's the only size that they'll sell. And the employee must get at least 25,000 on themselves in order to let their dependents be eligible. And what I've seen is employees buy one on themselves, and they're able to get a policy with their spouse and a policy for their 4 kids, and everybody gets a little bit of coverage. So just to touch on some costs here, I guess people overestimate the cost of life insurance at times, but this is an example for a $50,000 MassMutual policy, okay? So if you were age 25 and you bought a $50,000 policy today, that cost would be $7.39 per week, and that's guaranteed to remain the same for the rest of your life. That would never change. That's what I'm talking about, that guarantee. And if you're wondering, 100,000, it's basically double this, with the exception of a slight volume discount. So I would say it's probably $14.70 or something like that. You might save a few pennies. And if you waited and you're age 45, today, and you said, oh, I wish I'd done this earlier, but if you started then, it would be $18.81 a week. Again, guaranteed to remain the same forever. And for a 55-year-old beginning, it would be $33 a week. And this is the cash value that's guaranteed accrued after 25 years, but that's not including dividends, because although MassMutual has never missed a dividend since like 1857, prior to the Civil War, they never missed a dividend during one of the great world wars or the Great Depression or any other time. But I just don't know where it's going to go tomorrow, hopefully higher. So this is just the bare minimum guarantee. So this guy would have 9,700, but it's probably more like double with dividends and compounding over the years. This guy would 20 or probably 40, and this guy would have over 50,000 in my estimate. Here are the questions that we have to answer on the application. So the first question is, in the last 12 months, have you used tobacco or other nicotine-containing products? That's not a knockout question. It's just whether you get tobacco or non-tobacco rates, okay? The second question is important. Are you actively at work at your usual and customary location, maintaining your normal schedule, performing all your duties without limitation to sickness or injury? In other words, as long as if you're out on disability, short-term or long-term disability, then you can't sign up. You have to be actively at work. But if you come back to work after a couple of weeks of being on short-term disability or out on long-term disability, then you can sign up afterwards. And then the last question is, during the last 2 years, have you sought treatment for, been treated for, been diagnosed by a member of the medical profession of having any of the following? Cancer, heart attack, coronary artery valve disease, heart failure, cardiomyopathy, alcohol or drug abuse, diabetes for which the recommended treatment is insulin. So that's important, because if you're diabetic and you're taking something like metformin, or if you're on some other path to wellness, and you're not taking insulin, well, then the answer is no, even though you're diabetic. COPD, emphysema, or other chronic lung disease, stroke or TIAs, chronic kidney disease, kidney failure, Parkinson's, paralysis, cirrhosis of the liver, or HIV/AIDS. And hopefully you've had no experience, and immediately your application online would flood up to policy amounts up to 250,000. But if you answered yes to this question, the application would go on and you would be limited to that 100,000, provided this is your first enrollment. So why would I buy group whole life through my employer? It's just a little bit repetitive, but I apologize. This is the opportunity to buy what was traditionally an individual product sold only to executives with extensive medical underwriting. It's now available to everybody on a simplified issue basis. The convenience of payroll deduction through my employer. You don't have to find your checkbook and send in something or set it up yourself from your your account. You lock in that one price. I can't say that enough. No medical underwriting, which I mentioned, no doctor's appointments, and it's portable when you leave the company, new job or retire or whatever, at the price original, and these are all really guaranteed. So you're going to get some emails from MassMutual that have the website on it. On Prestige's portal, there's a link to there's a URL link to enroll. You start out by registration first, self-registering. You put your name and your address and everything else in there. You pick your own PIN word. Your login will always be your social security number, and then whatever PIN you choose, whether it's 1, 2, 3, 4 or your date of birth, that's going to be it forever. And then you can just go and enroll and sign up. Click your link into the site, and it's very easy to do. And again, you can, and I would encourage you to remember my calendar link, and we can do it together over a 15-minute Zoom call with probably 5 minutes to spare. This is what the website looks like right here. I don't know why they make it so small, but this is username and PIN. And then you get here and you click over here where it says MassMutual Worksite at Work. It really is not too hard. I appreciate everyone's attention today. I don't know if anybody wants to send some more questions into the, through the system here. I will stick around for as long as you want to answer them, but I do appreciate your attention. And my only ask is, if you have any coworkers who might not have been able to make this meeting today, you can offer them my phone number, my email, or my calendar link also, and I can share this information if you thought it was worthwhile. So I do appreciate it. I'll hang around for a couple moments to see if there's any questions, but thank you very much, and I hope everybody has a wonderful day.
Thanks, John. We did have a couple questions here.
Great.
Can you have whole life insurance through your employer if you have private term life insurance?
Absolutely. Absolutely you can. Many of my clients, and myself included, have multiple life insurance policies. As I kept having children, I kept buying more, if you know what I mean. And those are some term insurance policies, but I also have my 2 whole life policies that I keep funding, because that term insurance is a good temporary protection, sort of like something you're renting and you're going to move away from it at some point in the future. But my whole life is going to be there exactly for that long, my whole life.
Okay. And how many years do we have to pay the premium?
Okay, that's excellent. Well, they're all excellent. You can pay it for your whole life if you want to. Okay. The longer you pay it or contribute to it is really the word I'm going to use. You pay for things that this is an asset you're going to get back. So this is like a contribution. You don't pay your 401k bill. You contribute to your 401k. But anyway, I digress. So you can pay it for your entire life, and that would maximize the insurance growth, obviously, and the cash value growth. So when you did pass eventually, hopefully a long, long time from now, that would give you the greatest amount of death benefit. But on or about, because I can't tell you exactly, because I don't know where dividends are going to be next year or for the next foreseeable, say 15 years. But on or about the policy's 15th anniversary, the dividend growth from the mutual company, along with your cash value, can be used to cover the premium for you. So you would not have to pay it ever again. It would still sustain itself for the rest of your life, but there would be very little insurance growth. That those dividends would be used to cover your premium and not increase your insurance amount. So the difference would be if that $100,000 policy had grown to, say, $115,000, and then you stop paying it because you could use your dividends and your cash value, then it would stay at 115, but it would still last for the rest of your life. And you can pay it for 20 years and get it a little bit higher and then stop, or you could pay it for 30 years, go ahead and then stop then if you wanted to.
Okay, great. I think you answered all the questions. I do have a few people saying that they're going to reach out to you, John. So
Great.
his number's here on the screen. Thank you again. Oh, one more came through here. Let me see here. Is there a deadline to enroll?
So MassMutual, together with Prestige, are going to start an enrollment uh, on October 1st, and Mass is going to keep it open until the end of November. So a full 8 weeks. So whenever your enrollment for your particular company is, it'll be there. But you can enroll anytime between the 1st of October and the 30th of November. Just reach out to me. I'll bring you to the site and we can get it done. But so the deadline is November 30th, 2025.
Gotcha. All right, and I did have a few more pop up here, so let's
Oh, great.
address these. What is the benefit of doing a group whole life versus a private whole life?
Simply the benefit there is the underwriting. Um, you've got the guaranteed issue if this is your first um, enrollment. So you have no underwriting and it's a payroll deduction. That's the basic difference. Everybody, all of my other clients, we go through an underwriting process where we fill out the application, we submit it to MassMutual. They have to take a paramed exam, which consists of a urine sample, a blood sample, blood pressure, rested heartbeat, height and weight. And they take that information along with a health questionnaire email, which is similar to something that you fill out at the doctor's office with the clipboard, and you have 100 checks, allergies, sleep apnea, etc. So you take the medical exam, you have to fill out the questionnaire, the application, we send it all to MassMutual, and then they go through all of the information, and then they figure out what your health rating is going to be. You have preferred rates, standard rates, and then what they call table rates, which are standard +1, +2, +3 for the less healthy people. And sometimes people get rejected when they go through underwriting. You can't get rejected by the group policy. It's just different processes.
Okay, great. And then can you take the dividends as distributions while maintaining the rest of the policy?
Yes, you can. Um, Not in the first year. The default is signing up for what they call paid up additions, your dividend option. Paid up additions is what makes the insurance amount grow. You add to the life insurance amount, but in the future you can switch that and take the dividends in cash, and then the policy wouldn't grow as much, and the cash value wouldn't grow as much because you're pulling the money out. But absolutely, you may.
Okay, great. I think we covered everything. Thanks again, John.
Well,
The
thank you for those
recording,
great questions, everybody.
yeah, I love the participation. We
Yeah.
appreciate that. The recording of this webinar will be posted on our Open Enrollment Resource Center shortly at prestigepeo.com/open enrollment. I think if you go to the next page there, there might be
Oh,
another screen.
oh yes.
There
Sorry.
you go. Okay. If you have any further questions, feel free to contact John directly or your benefit specialist, and then connect with us on Facebook, LinkedIn, Instagram, and X for the latest information on Prestige PEO. And lastly, don't miss out on our Prestige Go mobile app, which provides access to benefits information and on the go support from your HR team. Thank you all, and we look forward to seeing you next time.